What's going on, guys? It's Mike back with another video, and in this video I'm going to show you guys how you can scale entries to make more profit. This is the easiest way and the easiest thing that you can do when you're trying to flip accounts, or maybe you're just trying to grow a small account or even a bigger account at a faster rate. So really listen in, get your pen and paper out, take notes on this, and let's get into the video. Alright guys, so right here we are on AUD USD, and I want to show you guys a very quick example. This was actually a very nice move in which AUD USD basically gave us right here. So right here I'm on the 4-hour chart, and right off the bat you can see that, if we did draw a trend line right here, the trend line was broken right here in this example, and you had the moving average basically telling us that price was making that shift after that was broken as well too. Okay, so very simple, and then that's basically showing us that price is starting to switch into that downward trend direction. Okay, and then also we are on the 4-hour too, so you can see that the first lower high was pretty much created right here, so this was nice in itself, and then it also came back here and stopped, which is basically our area of interest right here. So if I go ahead and draw the box right here, this is where the area of interest was, and this is where we want to see if we can find our first entry. So now we're on the H1 chart, and if I go down another one, we can go to our first entry time frame, which is what I like to call the 30-minute chart. Okay, so very simple so far. And right here off the bat, it did come to this area, but I would have waited for the first retest, which in my opinion was up in this area. Okay, so if we draw the fib from here to here, okay, and what I'll do here for you guys is I'll actually put the replay, and then I'll bring it right here. So now you can basically see that price did come up all the way to the 78.6 area, and then this was that higher high that was made from this sequence. We got the higher high, higher low, higher high, higher low, higher high right here. But then price broke previous higher low, and then it made a lower low. Now we're trying to see where that lower high is going to be created. So you guys always see me in my videos, I always talk about the 78 and 88.6 retracement levels. These are where price basically gives us the best opportunities to get in, because now we are closest to the previous high that was created. So we know that if price basically comes above this level, then we don't even want to be in the sale in the first place at that point. Okay, but if it stays below our 100% right here, then it has a means of possibly going down in the downward direction, right? Okay, so right off the bat now, all we're doing is waiting for that candlestick pattern, that candlestick confirmation, to be able to get in this market. So if we play it through, you can see what basically happened. I know this one looks like this on the 30-minute. If we go to the 15-minute, then you would have had another opportunity right here as this candle basically pulled back. So let's say you got in right here, okay, first entry, then place your stop loss behind the next fib level, like I always tell you guys about, for that minor risk. If you want to be even safer, place it above the 100% or at the 110 or the 120. It's going to be your personal preference at that point, but anywhere in here is still considered the fluctuation zone, so you want to keep that in mind when you are trying to get in to the trade. Okay, and then of course we have our targets at -27 and -61.8, right? So you see this is 38 pips, and you see this is like 50 pips right there, right? So now the biggest part of this is, how can we turn this into a bigger move? So this is only considered 52 pips if it goes all the way down there, right? So what do we want to do now? For our first entry, we want to wait until this one goes enough in the profit to where we get enough cushion to be able to scale in that second entry. Okay, so right off the bat, this is how it plays out. You play it, you play it, you play it, and now we're up a good amount of pips right here. We can even draw our trend line right here, just to be aware of that third trend line touch. So you play it through. Boom, we got it right there. And you can see price is pretty much having a hard time breaking this area in this example. And this was a nice low area right here. This was actually an area of significance as well right here, and we're gonna make it a color. We're gonna make this one red, okay, so you guys can see it. this was one of those highs right here. This was one of those highs. This was once a resistance, and then we want to see if we can get in again to take price to the downside. So right here, you can basically play it through. So right here, you're already up. If I measure it from where you entered at, where we entered right here to down here, you're up about 20, almost 25 pips in this example. But, you know what I'm saying, it did come back, so you would have gave back at least 19, 21 pips max right here. But say around here, 20, 21 pips, something like that. And you're still up in profit in this example, but still our overall projection is still down here, so you could have still got an entry. Okay, so we're still waiting to get that confirmation that we want. You could have gotten right here, or if you want to wait it for that next lower high, you still wait, and then boom, you could have got in right here. Could have got an entry down here. Based on the 5 minute, I have to scroll down so we can basically get more information on what was going on. Right here, basically, because this engulfing candle is a lot in general. So you could have got in right here, stop loss behind that fib level right there, because you know we are at the zero technically. So still you have our targets down here, basically, and then right here. Okay, play it through. Boom, you can see that. So 38 pips with this one, and then 11 pips with this one. So those two apiece, I mean, that's big in itself, because you already know 38 plus 11, that is about almost 49, 50 pips right here. And then if you go down again for 52, and then 25 pips, because that's TP1 and TP2 that we're basically looking at. So then that would be a total of 77 pips right there, just from you scaling in both of those entries. Then if we go down even further to our main 4-hour target, if you held it all the way down here, basically, that was 58 pips right here. And then that one was 84 pips on the other one. So that would have been a total of 138 pips that you would have got out of this move on AU, because you scaled in the entry. So this is the best way to do it, to be totally honest with you guys. I never scale in entries unless I have enough profit on the first entry. And this is just an example on AUD USD. Okay, this is just an example on AUD USD. You know, AUD USD is a lot slower. I do talk about that in my videos. And it doesn't pay out as big as the more volatile pairs like GBP USD, GBP JPY, and you know, if you're trading the indexes and stuff like that, and you know how to do this, I mean, it can get crazy. You can make a lot of money. But in this example on AUD USD, it is slower. You know, the pips, you know, you're not really gaining that many pips with these smaller moves and stuff like that. It's not like GJ where this move from here to here will be like 200, 300 pips type deal. It's definitely a lot different, but if you can get this concept down with the slow pairs, you'll be a bad boy, I'm telling you guys. So if you guys did enjoy this video, man, you guys already know what to do. Hit that like button, hit that subscriber button, and turn on that notification bell to stay in tune with my channel. Man, scaling the entries, man, this is how you do it. This is really how you do it. Risk-free, risk-free. You see this one, the last thing I want to say is you see this one, if I measured it from here to here, the top, because you only would have been in 5 pip drawdown, and if you take this right here to where that was, it would have just been 5 pips. You went 5 pips down, like against you being up 20, 21 pips right here. So that wouldn't have been affecting you at all for your first entry. So just keep that in mind, guys. Like a lot of people too, like some traders, they'll bring their stop loss from this one, their first entry, to their second entry stop loss right here. So I have the stop loss from the first one right here, so you can put it right here, for example, boom, like that. And then you see it didn't hit, but it would have been risk free overall, so you wouldn't have lost any money either way. You would have been gaining a little bit of profit either way. So that's what you want to be very, very selective about. But other than that, guys, like always, I will see you guys in the next video. Peace.